following is a production of the Financial Survival Network and Andros. For more information, go to kerrylutz.com or tedbits.com. 1490 WGCH, this is Kerry Lutz. You're probably wondering about the significance of the S&P breakout. You're probably wondering about the significance of the government bond yield breakdown, the stress tests that are going on, not to mention that letter from a former Goldman Sachs managing director. And finally, did the banksters win or did the people win in Greece? And with me to analyze those topics is Andros of TraderView and TedBits. Ty, are you there?
I am. How are you?
Doing great, man. Like last week, I was so under the weather, I could barely look at my screen. Now it's a week later, I'm feeling better, and I'm ready to attack.
Well, I'm glad that you're feeling better, and, everybody needs to be attacking right now because, darkness is falling on the developed world.
Yeah, it really feels like that. I am reading a book right now, Currency Wars by Jim Rickards, and one of the things he's talking about is the complexity of systems and the way complex systems break down. And it's not just a complex system in the United States, it's a complex system that every country in the world belongs to. And when it collapses, nobody knows what the world is going to look like after that. I feel like if Rickards doesn't know, then nobody knows. But we're sure in the middle of that now, aren't we?
As I've said for years, this is a currency and financial system extinction event.
Yeah. So here I am. I'm Joe Sixpack, and you've got $10,000. So S&P breakout, what does that mean to me, Ty?
Well, if you're an investor, don't be a fool.
Sometimes I can't distinguish between investor and fool myself. Sometimes I think there's no difference, especially if you've been in the market for as many years as I have, and you've been burned over and over again.
Well, the Federal Reserve and Liberty Street can read a chart just like you and I can, and that was basically a staged, I'll call it intervention, where, they were up against resistance, couldn't get through it. And then they waited till, say, 3:01 in the afternoon. And Jamie Dimon does a front run of the stress test decision, which was supposed to have been released yesterday, but he did it Tuesday afternoon, 2 minutes after the floor closed. And, pushed it higher, and you could just see the amounts of shorts that were just immolated there. The trend went to 0.2, which really just showed you how many people were short at the top of that range. But anybody that's watched this rally that started in the beginning of October knows that the internals of it are, as bad as it gets. In fact, volume compared to last October is off 20 or 30%.
Really?
And so, basically the public has gotten out of the market. The only people in there are people that have to trade: hedge funds, institutions, pension funds, and, our favorite high-frequency traders. And but the public's abandoned the market. And Bernanke just cannot get them to go into the market. And so now he's trying to offer them some fool's gold and get him to say, oh, wow, we're breaking out, it's 1 year highs and blah, 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 blah. And, I'm not going to pay you anything for saving your money. Please help me intervene in the market and get out of your bonds. Well, they got out of the bonds. Okay, that's we've had now a monthly sell signal in the 10-year note and the 30-year note, and I call them bombs, but it's bombs away right now.
Right.
And so it's an interesting week. It was actually a fairly slow week, other than the breakdown in the bond market. Really haven't seen a lot from the dollar, other than the yen's in free fall. But no, that breakout is, I believe, fool's gold. I don't know where the top's going to come in, whether it's, there's a lot of turn dates. Today's quadruple witching. And we have some Bradley turn dates in here and some Fibonacci time turn dates. And I don't know if the top's going to come in now or next month. And of course, it's very hard to fight the Fed because the Fed doesn't want the stock market to go down. I mean, we had that pullback and it was immediately pushed back higher. And of course, we can see that little squirrel running along in all the charts. And I was looking at all the charts of all the stock indexes around the world yesterday, and basically they're just mirror images of one another.
Right.
And it's just amazing how correlations have gone to one.
Mm-hmm. Yeah, a little suspicious there. So what happens?
It's called money printing.
So they're trying to manage the perception and make you believe that everything's fine, the problem's been fixed, the economy, your savings, your life, your wealth, you can trust us, we're your government, and just go about your life, take out the credit card, go to Walmart, and you buy that flat screen TV, you buy whatever you want, go get that new car, because you're safe, your life is fine.
And we'll loan you the money for it. Don't pay cash.
Yeah. So what do you do, Ty?
Don't be fooled by the pullback in gold and silver. This is really, we've had a sharp pullback, started, with that, I'll call it government intervention 2 weeks ago. But, things, for most people, they need to be buying pullbacks and not highs. And, gold and silver could go lower, but over the intermediate term, Kerry, I put up a couple of charts of money supply growth for the listeners, and you all should go look at it. And
let me just interrupt. If you go to kerrylutz.com, subscribe to the newsletter, you'll get a copy of it, so you'll be able to see it when you're listening to the show.
Sooner or later, that money supply creation is going to be priced in. Sooner or later, sooner in the case of the Chinese, they're going to exchange those worthless little coupons for real gold. I mean, this isn't your mother's gold and silver market anymore. There's now strong hands. So, we have the people that are manipulating it using ungodly amounts of paper margin. And we have the other people that are accumulating it, and they don't sit there and buy the gold and put a stop in. They sit there and they buy the gold and they say, deliver, buddy. Okay? And stand and deliver, like I pointed out, during that intervention in the silver, it was 10 times the amount of silver they have for delivery at the COMEX.
Yeah, and it's not unusual during the course of a day for there to be 400% more contracts out there than there is silver to deliver. 400 times the amount. I heard a guy from, I think it was Jeff Christian, said, no, it's not 100 times leverage. It's 400 times leverage during any given day, but 3/4 of the positions get closed out before closing time. And that's a little frightening that markets could be so leveraged because, as you know, the more leverage you have, meaning the more borrowed money, the more unbacked contracts you have, the greater the chance of a blow up, like fill in the blank, right?
Well, but I think Jeff Christian is talking about the difference between the COMEX and London metals. And the London metals is no doubt at 400 to 1. I don't think the COMEX is I don't think the COMEX is quite that levered. I think it is, I think it's more closer to the number you have.
Yeah. Yeah, it's about 100 to 1, but what's the difference really? Because, if there's a slight disruption, there isn't enough metal when they're lined up, just like Ponzi, when they wanted their principal back, they lined up around the block. And he paid and paid and paid until finally he didn't have anything left to pay with, and then they hauled him off to jail. Here, they're not going to pay. They're going to settle in SLV or in GLD because they actually have the right to settle contracts in that now, don't they?
I wasn't aware of that, but it doesn't surprise the Bundesbank has demanded an audit of their gold and silver at the Federal Reserve and the Treasury. And it's been reported that, contrary to their central bank law, they haven't audited their holdings for 4 or 5 years. And it's, shades of Fort Knox, right? No one's seen that gold for 50 years.
Well, I saw their gold. I visited the basement of the Federal Reserve on Liberty Street in Manhattan. And interestingly enough, the headquarters of the Fed there, the New York Fed, is right across the street from One Chase Manhattan Plaza. Now, you could draw inferences all you like, but there's something to it. And I saw all that gold there. They wouldn't tell me who it belonged to, but the gold is there. But as far as who has claims upon it and has it been leased, sold, or whatever, it's unallocated and nobody knows, and they're not telling, are they?
No. You can bet your bottom dollar there's 50 titles to the same bar. Yeah, if only I could do that with my house. You know what it's like, Ty? In New York, every now and then somebody puts an ad in the paper that they've got this phenomenal apartment. It's beautiful, and it's only $1,000 a month. And then they get people come up and they sublet it to 20 or 30 different people, pocket the money, and take off. And that's what the gold room of the Federal Reserve is probably doing as well. Well, it's not the first fraud they've perpetrated, and it's not going to be the last.
Yeah, they're on a slippery slope, aren't they? So we had these bank stress tests. Did they mean anything?
They want to maintain confidence in the system, so they have to work the con a little bit more, don't they?
Yeah, well, they definitely put the con in confidence. And if you're a depositor, if your money is at one of these money center banks, what do, Ty?
Withdraw it.
And then what? To cash? So I'm supposed to have piles of cash in my mattress, or what do I do?
Well, it really just depends on the size of investments. If you are a small guy, I would recommend that you have most of your money in gold and silver, either in your possession or in a vault like gold money that's in Zurich or Hong Kong. If you're a bigger investor, then you have to really do what's called the indirect exchange. And you have to make sure that your portfolio is in real things that really cash flow. You need to repair your paper. You need to learn how to make money when markets decline, because sooner or later this leverage is going to come apart like a hurricane.
Yeah.
And really the prescription for what you need to do has got to be, you have to really make a profile of yourself and look where you came from and where you want to go and what your risk tolerances are, and it's really preserve and protect before you build.
Yeah, and you talk about risk tolerance, but the risk of leaving your money in these green stamps, and that's what I call them, they're just like those green stamps that your mother used to get at the supermarket. She'd save up 100,000 of them and buy a height chair at S&H Green Stamps. We're pretty close in age. I'm sure you remember that.
I certainly do. Yeah. I had books.
Right.
You would put them in the books, and once you got a book full, you could redeem a certain amount, right?
Yeah, remember, I'm sure you were licking them just like I was on the kitchen table, putting them up there, because my mother had piles of these things. It was nuts. And there was also plaid stamps, and there was a blue stamp also. And then my grandmother, remember Raleigh and Bel Air cigarettes, they had a little coupon on there. And it was the same kind of scam, but you had to accumulate so many of these things to get anything, and then you wound up getting a bunch of crap that you didn't want, like a defective toaster, and you had to go to the place and redeem it, and it was just one inconvenience after the other, but you still save the green stamps, and that's what the money system is.
Yeah, well, I've got a little different memory of it. I was a young boy, and I guess I got to think that I was delighted with what I got. But, it was so long ago, Carrie, I can't hardly remember.
Yeah.
And, I got to, I'll call it stamp linking poisoning. I was poisoned with a glue. So after a while, I had to just, I learned about going and getting a sponge.
Yeah, that's right.
I remember it clearly.
Yeah, I remember this. I mean, like I didn't get the gift. My mother kept it. But so you have better memories than me, Ty. What can I tell you? But that's what the dollar is becoming. It's becoming a green stamp. I mean, the thing was worth like 1 mil or 2 mils each green stamp. And, that's what our economy, our money system's turning into.
Well, there's no income growth, no wealth creation. We've the last 4 years is a nightmare, Carrie. We've had $1 trillion deficits now for, there's a lot of economic milestones. We've had 4 years of $1 trillion deficits, $5 trillion worth of new debt, on its way to 6, because we had $9 trillion worth of debt at the end of the Bush administration. By the end of this year, it'll be at 16. So what's that, about a 60% gain?
Well, it sounds like 2/3 to me, so that's about 66.66%.
We've had the loss of America's AAA credit rating, 3 years of near 0% interest rates, and theft of returns for savers and transferring it to the Treasury and to the banks in New York. We've got post-war records of federal spending as a share of the economy. Obama has expanded the share of federal spending from 19% to 24%. And now...
And he's not done with that either.
No. And now we're the world's #1 highest corporate tax rate as of today, because the Japanese...
They cut it.
They cut their corporate tax rates. And so now we're the most uncompetitive corporate climate in the world.
Yeah, except maybe Greece. So what about Greece? How does that affect you? I mean, you're a working guy here in the U.S. You work your 9-to-5 job, and you're busy, living your life, raising your kids. What possible difference could the turmoil in Greece make any difference or influence in your life?
It shouldn't influence you today, but it should influence your behavior going forward. Because the United States and Greece, by almost every metric, the United States is worse. Whether it be per capita debt, unfunded entitlements, the amount of unfunded entitlements that are piling up every year, that's only a specter of things to come. I mean, people think that these things don't matter to them, but what these are basically, snapshots of the future. And we're at a point where you have to prepare for the worst and hope for the best, and nothing less. Greece is a terrible case, but they've now been enslaved by bankers, and then the bankers got paid off, and in exchange they got the new masters are the EFSF and the IMF and the EU. And so what they've done is they've really turned these people into indentured serfs of Brussels, Belgium.
Yeah, and at least the serfs only had to give 25% of their production to the lord of the manor. These people are going to be given close to 70 or 80 for the rest of their lives, aren't they?
Well, that's a pretty high price to pay to be in the Eurozone, isn't it?
Yeah, and they have the ugliest money. Let's face it, the euro is ugly because it stands for nothing. It's backed by no one. It has no nationalistic character to it. So it's neutral. It is a neutral-looking thing. Like you look at
it's a Keynesian's wet dream.
I love it. Hey, that's the headline of this segment, the Keynesian wet dream. I'm holding in my hand, and you can't see it, Ty, because you don't have your webcam on, but I'm looking at a silver eagle, a United States silver eagle. Not that it's money, according to the Ben Bernanke, but it is a beautiful coin. It's really got character. It is pretty close to a work of art that's mass-produced, put it that way. And you look at the euro, and it is just this yucky-looking money. There's nothing. It just, as Jim Sinclair says, The U.S. dollar is an I owe you nothing, and the euro is a who owes you nothing. And like you said, a Keynesian wet dream, and soon to wake up to reality, and reality is not going to be too pretty for you, is it?
Nope, and the wake up is the right term, because people are going to wake up. I mean, because we're, it's been talked about too much, but financial repression is real. Stealing the purchasing power out of your money while it sits in the bank, and your balances stay the same. I mean, you're losing compounded 9% per year. They're planning on cutting the value of what they owe in half in the next 7 years. And
they're well on their way. And you know what? If they go far enough, they won't owe anything, because everything you have, every piece of paper you have, will be worthless. And that's why hyperinflation and inflation is a debtor's best friend.
It is, and it's a big transfer from debtors, also known as banksters and sovereigns, to they're planning on stealing everything you have, and of course everything's denominated in these worthless IOUs, so you can be sure you're going to get them back. It's just how hot are they, because they just came off the printing press, or with a Control F print.
Yeah. And if you try to do it, you try to print your own money, and you wind up like that guy, I can't remember his name now, who got locked away for printing liberties. And, it's really an unpleasant state of affairs. And finally, I just want to cover with you MF Global. It's something that you know something about. You're saying now that the resegregation of the financial system, that having your money in a segregated commodities account is probably one of the safest places you can have it in. How's that?
Well, I think so. I'm sure you saw there was 4 or 5 suits filed this week against futures brokers for properly not doing seg. Mm-hmm. And of course, it's a day late and a dollar short. But, I don't believe that this one's going to happen again anytime soon.
You think it was a one-off event?
Well, it was pulled off by somebody that is one of the most, well-connected public servant in the world. Mm-hmm. And, Corzine, and, he hasn't even been deposed or questioned to this day. He was one of the greatest fundraisers for the Democratic Party, ex-senator, ex-governor.
Ex-governor,
the word's gone out. You can see that the prosecutors in Chicago are virtually rolling over like kittens. So is the CFTC. They keep putting out these trial balloons that the money's gone, it evaporated. Well, let me just tell everybody out there, you can't put $1.5 billion in a grocery sack and walk it across the street. They know exactly where that money is, and the big banks, which really, it's every day you can see more and more that the big banks are controlling everything, controlling every politician in the UK and the United States. When we sit there, and we had some interesting things happen as well with Jamie Dimon and that sort of thing. This week we had a blistering letter from a retiring Goldman Sachs executive vice president, and I urge everybody to go read it. But it just shows what the banks have devolved into, and they're just basically predators on their customers. And he outlined the amount of predatory things that were happening around him, and it was interesting that you would think that when something like that happens to Goldman Sachs, that J.P. Morgan Chase and everybody else would be going to work to get those customers.
Yeah.
Instead, Jamie Dimon says, we're not going to take advantage of this problem with public relations, which tells you that basically Goldman Sachs and J.P. Morgan Chase are Tweedledee and Tweedledum. Okay, and they're part of the same group.
Yeah, so tell me some good news here, Ty. Tell me how you can get rich in this awful economy with all of this rampant rent-seeking theft taking place.
Well, if you're a little guy, you need to take advantage of the pullback in gold and silver because obviously this is the most despised bull market in history because it destroys paper. If you're a high net worth individual, you need to be diversifying. You need to, at the most, keep 20% of your wealth in paper. The rest of the stuff needs to be in stuff that cash flows. You need to be able to go fix your paper, learn how to make money in down markets, wait for real estate to fall into your hands. We still have a huge debacle in commercial real estate coming. It's just barely begun because they won't be able to roll those notes. And, the opportunities are actually as big as the pitfalls, but you really need to learn how to apply Austrian economics and understand what von Mises is talking about and identify investments that can thrive during those periods. And like I said, this is actually, there was huge fortunes started in the Great Depression. And this is going to be no exception. This is that same kind of thing, but it's actually probably 1 or 2 degrees worse, maybe 4 degrees worse. And so, because, they didn't have to go from greenbacks to bluebacks.
Right.
And, the reason the United States is surviving is it's basically a Pavlov's dog. And people run to the United States for safety, but the United States isn't what it once was.
That is for sure.
And it's not going to return to its former status as a powerhouse wealth creator until the progressives in Washington are deposed. And I mean the progressives on both sides of the aisle, because that's also Tweedledee and Tweedledum, or I call it the Gaudis and Gambinos, and they're fighting a turf war known as an election to see who gets the front row screwing the public.
Yeah, well, what did H.L. Mencken say? That an election is just an auction of goods yet to be stolen?
Well,
right?
no, it's never been truer than today, is it?
Ain't that the truth? So we got to wrap up, Ty. So where do we find you?
I'm at traderview.com, and we're going to be rolling out the new website this week, tedbits.com, and subscriptions are free, but it's going to be hard hitting, and we have to have subscribers so we can get that disclosure in place, and then we can be more hard hitting.
All right. Hey, excellent. So we'll talk to you next week, Ty. Have a prosperous week ahead.
Good luck and God bless.